Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gowden. Jumping into the charts on this October 21st. Options X is among us, and boy did the rumors start. It is a powerful rally today on Wall Street. Basically, it is a broad market rally, but there are some things that got hit on earnings and some sectors that are, or some stocks that are down. But overall, a power session for the S&P, the Nasdaq, the Russell. And why? Because the dollar is down. But there's lots to discuss, more than just the dollar being down, as well as yields and the Bank of Japan doing a major intervention, which is helping suppress the dollar in the short term. Now, let's just discuss the S&P 500. The S&P 500 has had a powerful rally, and the fact that it looks like you're closing near the highs today is certainly going to be a positive bullish sign. Now, you are into a little bit of resistance. You can see all of this chop over here. You can see this gap fill, this chop over here for breaking down, this major reversal, but nonetheless, this is still bullish consolidation, so it does favor a potential move to the upside continuation. But needless to say, if we do get follow through on Monday, which is actually likely, you have this downsloping trend line, which will be your first big level of resistance on the S&P 500. Intraday action, you can clearly see we're filling a technical gap at the moment on the SPY. This one's around 374. We haven't hit that yet, but we're awfully close to doing it. Now, why is the markets rallying so hard? Well, there's a couple reasons. Options X was today, and we saw basically the biggest inflows of option puts. So basically people betting to the downside of the market. So that's one of the reasons why we're seeing this jump. But the two bigger catalysts is, one, earlier in the morning we got a news announcements from the Wall Street Journal, which is the mainstream outlet that the Federal Reserve likes to communicate to. That's their preference. And basically what the Federal Reserve or an insider perhaps has said from the Wall Street Journal is that the Federal Reserve is going to raise rates at the November 2nd meeting by 0.75%, and then they're going to pause. So right away, that pause has injected some fuel into the markets. Now, the question is this real, or is this just rumors on options expiration? Well, based off of the price action in a variety of assets, I would say that this is probably a likely scenario that they will pause, and maybe they're coming to their senses that they're most likely going to be breaking something in the markets. But one of the reasons why I think the rumor is true is if we simply look at the DXY. The DXY says it all. Let me just remove all of these. At first, initially, we had a massive surge up in the DXY. It looked like we were breaking out. The markets were under pressure. They were down like between 1.5%, and then the dollar just started to reverse. But the Federal Reserve coming out alone was not the only reason that the dollar started to reverse. If you simply draw this trend line in here, you can see that we're bouncing off of this level over here, connecting a pivot to pivot to pivot. And the key fact is that every time we've bounced off of this blue trend line, the 25-day moving average, we have had pretty much follow through, except for this time. We bounced, and now we're reversing in such a close proximity. You can see that it was a variety of many days that we tested that 25-day moving average. You know, when you bounced off of it here, you had 1, 2, 3, 4, 5, 6, and basically a couple weeks until you retested it. When you bounced it here, a few more weeks until you tested it, and then you bounced off here, another few more weeks, and then you bounced off of it 2 days ago, and now you're retesting it and looking to break this level. Now, we were prepared for a dollar to potentially fall. Our big level on the dollar of support is basically around here, this 110 and change level. You can arguably draw a couple different trend lines, but in and around that level is going to be some support. It's the 50-day moving average. Now, the dollar's not going to give up its status that easy unless the Fed comes out with an official announcement that really starts to get these markets to fall. But nonetheless, a massive reversal in the dollar. The dollar is down just almost 1%, and it'll be interesting to see where we close on this trend line. Is it going to break it and close and then potentially set up confirmation to the downside? Time will tell. The other big thing is I just want to show you the US dollar Japan chart. This is an incredible reversal. So the second reason why the markets have had such a powerful rally is the Bank of Japan has come out today and defended their currency. You can clearly see that the massive devaluation in the yen has been what's propping the DXY up. But today, that's where the Bank of Japan put a stop in it. They started offloading all of their, or not all of them, but they started offloading many of their treasuries, their US treasuries, which obviously puts pressure on the US dollar. They sell their treasuries, they basically get yen, or they basically get dollars, and then they convert that back into yen to strengthen their currency. And when you see a reversal of this magnitude, arguably one of the biggest reversals in Japanese yen history, it's truly witnessing history unfold. And not only is that a massive, powerful reversal signal completely engulfing 1, 2, 3, 4, 5, 6 days of price action, if you flip to the weekly, let me just pull up this weekly. What is that? A weekly reversal signal. So that is truly powerful signals to watch. The next big support on the yen, you do have some support at these 144, 145 levels. But ultimately, if you start getting confirmation next week to the downside, you could easily come back down to this 140, 141 level, and then ultimately back down to this 138 level, which should prove to be a big drop in the dollar. Now, along with the Bank of Japan intervening, if we take a look at the US 2-year yield, the US 2-year yield had an impeccable rally. Let me just zoom in on the charts here so we can see. But basically, we have been watching this US 2-year, and we said you're into massive resistance. This parallel channel has acted like a beautiful resistance level that has worked out perfectly in our favor. And look at that. We were saying you potentially have a confirmed breakout on the 2-year yield again, but we had to wait for confirmation. You actually made a new high on yields, which was scaring the market early on, and then you've completely reversed, engulfed that previous session, and now you're confirming and looks to be breaking this key trend line of support. So that's a massive break in the 2-year yield. Obviously, this implies that the Federal Reserve is going to be less hawkish, so that is extremely bullish for the markets in the short term. Now, let me be clear, just because the Fed is pausing, they are generally going to see something on the horizon. So the Fed pausing should ignite a small temporary rally in the markets, but let me be clear, once a recession is priced in, and that's probably the only reason why the Fed is pausing, a recession or something breaking in the foreign exchange markets, these markets will go lower. We're not going to new highs. Many people will think we're going to be going to new highs, new all-time highs in these markets, but that is farthest from the truth. Generally, during a pause or a pivot, you get a sustained small rally in the markets. People are over exuberant again. But the reason the Fed pauses is because we're heading into a deep global recession. And their interest rate hikes that have transpired basically since the start of the year, if we zoom out here, have not even hit the real economy yet. So that might be what they're seeing on the horizon. Now, the big level that I'm going to be watching on Monday is if we confirm below this yellow trend line, we likely head back to this 436 level, and then potentially even down to the low range of this channel. So this is going to be a huge level. If we get a massive pull down in yields, that's certainly going to ignite a rally in the markets. And we, as you can see, I covered many shorts today just to get out of those positions, accumulated a little bit of more long positions, and I do think we're well positioned to potentially catch this little bit of a small melt up rally. But I'm going to emphasize again, we are not going all-time highs. The markets, I still think, will make lower lows, and I don't think we're going to be testing the highs or even close to the highs. If we take a look at the US 10-year yield, it is also another intriguing chart. A beautiful reversal. You can see that we drew these two yellow lines in, which were your weekly gap fills going back all the way to June of 2008. We touched on that yesterday. And now look at this beautiful reversal. This daily topping tail is a thing of beauty. And the key thing is that you look to be breaking out of this parallel channel, connecting these pivots over here to this pivot, to this pivot, to this pivot, and you looked like you were breaking out. And this is the importance of waiting for that secondary factor confirmation, because now you've reversed and it's likely that you're going to be heading back down. The big level that I'm watching on the US 10-year yield, let me just erase some of these green lines here. The big level I'm watching on the US 10-year yield is if we start closing below this upsloping trend line. That is going to mean the markets are in for some dire straits, and that's certainly what I'm paying attention 22. One of the reasons I think this rally is sustained, if we look at gold, gold has put in a beautiful double bottom, making a higher low over here, but double bottom nonetheless. Gold is up 1.73%, so a terrific move for gold. If we take a look at silver, silver is also up on the day. Breaking out of these two support lines is a tremendous thing to see. The next level that we attack is going to be this major resistance point over here. Once we get through that, after most likely a few days of consolidation, then I do think we can attack this upper level over here around 21.24, which should be a phenomenal gain for our silver mining plays and our SLV position. Let's take a look at the WTI, shall we? So oil's been a little bit lackluster today. Despite the markets rallying, oil's pretty much flat. This is probably due to options X. There's many stocks that actually didn't rally as hard with the markets as you would have expected, which is probably part and parcel due to options X. So come Monday, I think the stocks that didn't rally, if the markets are positive Monday, will see a bigger bid to the upside. So again, oil, I'm still bearish in the short term. I think you come back down to this gap fill down here, and we'll just have to watch and monitor that. If we take a look at natural gas did have another down day, which we added to our Boyle position. You can see it hit this double bottom on a beautiful oversold condition. If you flip to the weekly chart, a beautiful, even better oversold condition. So I have no problem accumulating more natural gas. Now I did do some rough calculation. There is the potential that natural gas can go down to this 513 and then at the low end of the range 455. But these are the levels we start accumulating in, because when natural gas has a bounce, it is going to bounce tremendously. So that's kind of what I'm watching in that space. Bitcoin should be interesting over the weekend. That's going to be a clear indication. I think Bitcoin, this is the weekend that it should break out. If it doesn't break out of this, let me just flip to this chart so I get a bigger screen. BTC USD. If Bitcoin doesn't break out of this downsloping trend line today, then I don't think it is going to break out. The markets have had a pretty impeccable rally. Once again, another reversal signal on Bitcoin, and it's testing that downsloping trend line, which you've weakened multiple times over here. Once, twice, 3 times, 4, 5, 6, and now the 7th time should prove to break this trend line, and you should get a sharp move up to 20,000, and then eventually even this 22, and potentially even higher from that point. So lots of things to discuss, many things going on. Basically, we picked up Baidu today. We added to our Baba. We also kept shorting a couple of our XOM, our VLO. We covered Roblox. We covered CellH. But we added to our UBT blonde play. So you can see UBT. Let me just take a look at this UBT chart. This UBT chart is putting in a nice little reversal signal over here. Whether or not it'll hold, time will tell, but that is truly a beautiful little start to an upside move back in bonds. And should the bond market continue to rally, that is going to be an awesome, awesome move for us if we can get some upsides and downside in the treasury yields. Let me just see if I can touch base on anything else. Let me just do a quick spider check again. So spiders are staying very strong near the highs. That is super positive. If we take a look at the QQQ, QQQ is also staying super positive. You do have a little bit of a short-term breakout happening here. Next stop is your gap fill. I do think we see that next week. And I do think this, with the chatter of a Fed potentially pivoting, we should start to see the overall markets pick up in favor to the upside with retail investors. Many retail investors don't even trade on Friday. A lot of people are away. So once the news picks up the story that there's a potential Fed pivot, I do think we could see an inevitable rush in the markets on Monday, Tuesday, Wednesday next week. Let me just take a look at a couple of the other plays like Newmont, which we're holding. Beautiful move in Newmont. Pan American Silver is another one that's potentially breaking out of this inverse head and shoulders pattern. So this still has upside to about $18.95, which would be a beautiful gain. And the beautiful thing about this is you never ever, why this pattern is still valid, because even if you broke the neckline, you never ever confirmed below the neckline. You never confirmed here, not there, not there, not there, not there, not there. And now it's looking to reconfirm on Monday, potentially above that trend line. If you get a continued upside move in silver, then the miners should confirm on Monday, which would ultimately take you at a high probability trade all the way up to 18.93. So exciting times in the markets. I do think we still have to be cautious because this could just be a bear market rally before inevitably bouncing lower. We did pick up TM. I do think I like Toyota just due to the fact that it is a Japanese play. With the Japanese now defending their currency once again and actually making a meaningful impact, I think it's likely that we see upside in the likes of Toyota because it is a Japanese company, and therefore as their currency starts to strengthen a little bit more against the dollar, that means that they're going to be a little bit more profitable on the bottom line. You can see that we're slightly in the money on Toyota, but I do think this is a quality company. You can see that even if we draw out a long-term trend line, you've hit this major pivot in 2011, you hit your COVID low, and look what you just tagged again. So this is a massive level of support. Where do I think we can go? I think at the minimum we retrace back to the weekly 200 moving average and potentially even higher after that. I think we can come up to fill this gap around 144, and then we'll just have to readjust based off of where the indices are. Just going to touch base on Apple. Apple's also having a pretty terrific day. If I pull up the Apple chart, you can see it's also having a short-term breakout. So nonetheless, that is a positive for the markets. Generally, these big caps will pull up the rest of the market. Apple, you have two gap fills, one over here, one over there. I think you fill both at some point in time, but you may just head up to the first one and then consolidate before moving to the next one. So as the markets rally up, we'll look to offload our longs and accumulate more short positions, but I did not want to get caught in a potential bear market bounce rally, just due to the fact we still have some key shorts on, like Netflix. I think Netflix has pretty much had its move to the upside. Maybe there's a little bit more, but you can see that you're hitting massive resistance. You have this beautiful parallel channel connecting your pivot over here, your pivots down here, pivot, and look what you just tagged today. And the importance of this level is you've pierced the daily 200 moving average, but also if you scroll back on the charts, what is this pivot? That is your COVID washout low. Now, is there potential that you could have a surge all the way up to this gap fill up here? You could, but again, you have to really take your shots at these technical levels and accumulate shorts. And I'll have no problem accumulating more Netflix shorts in the event that it does start to move higher. But overall, let's monitor Bitcoin. Let's see how that thing progresses over the weekend. But I do think that we're potentially going to see some upside in Bitcoin over the weekend. I would be shocked if it does not move to the upside. But again, you can see a little bit of sell pressure coming in at the end as we filled that technical gap to the upside. But overall, spiders are still had a very healthy move, up over 2.39%. And let's just see if this Fed sticks to the potential pausing scenario and how these markets fare. So overall, let's everybody